Alright, yes guys, welcome to the trade recap of the trade we took today inside of the lunch macro. It was a difficult day to trade, it was quite slow, and then eventually we took data highs and got no opportunity for shorts from there, continue higher, and let's get straight into it. So starting on the daily time frame, understanding the daily draw is definitely a little difficult today because we're not in a daily bullish gap or bearish gap. We are in this bearish gap to the left, but it's already previously been filled, so it's not actually going to be a major draw for price. Two major draws for price on the daily as of now are going to be these two unfilled daily bearish imbalances resting above on NQ. So we're not going to look to run a daily bullish or bearish bias. We're in a bearish gap where we have bullish confidences resting above. So on the daily, I've got a 50-50 bias. By looking at the 4-hour time frame as of now, we're not in a 4-hour bullish gap or bearish gap. We was in this 4-hour bullish gap. The draw would then be previous high. Previous high draw then got met. Therefore, that drawn liquidity is no longer valid. And we're not in a 4-hour bullish gap or bearish gap. Therefore, it's a 50-50 bias once again. So now by looking at the hourly time frame, you can see we're not in an hourly bullish or bearish gap once again. So yes, today was very difficult to determine a overall bias. And I managed to do it through draws on liquidity such as data and previous highs. So by looking at price on the hourly time frame, it's currently Tuesday, Monday, and look at Monday's high. Previous day high on Monday has already been swept, and we're in a daily bearish gap with unfilled bearish gaps resting above. So that's why we had a 50-50 draw. However, on the hourly, after taking previous day high, we can start to assume that the next hourly candle is likely to draw lower. However, there's not a conviction on why price would want to draw lower. Not in a bearish gap and nor in a bullish gap. So on the hourly, I took it into consideration that previous day high had been swept, but still leaning on a 50-50 bias. Now looking at the 15-minute time frame, we want to mark out London highs, lows, Asia highs and lows, and also on this specific day, 8:30, we had a set of red folder news which came out and caused a wick for both sides. Therefore, data highs and lows, which you can mark out on the lower time frame. So between 2 and 5 a.m. today, I marked out London lows. We also had a clean set for Asia lows. And then if you drop down to the 5-minute time frame, you'll see that we had a set of data highs and data lows, which was caused at 8:30. You can call it buy side, sell side, you can call it anything, but I like to mark it as data because this is why the low and the high was caused, is because of news at 8:30. Okay, so by looking at price as of now, we took data highs going into the first day of macro. Do you guys understand why no trades were taken here? There's no reason to look for longs because data highs has been swept. There's no displacement lower for price. There's no valid trade here at all. Therefore, no positions taken. Price continue to draw higher. Okay, no problem. Let's fast forward price. Let's put it on a 5x. And there you have it. So price continue to draw higher. Now we're outside of the first day of macro. Let's fast forward price for the second day of macro, which is at 10:45 to 11:15, and we can monitor inside of this window, is there any opportunities that we would look to take? So now monitoring inside of the second day of macro, there's clearly going to be no positions that you would look to take here at all, and that's the end of the second day of macro. So hopefully you guys understand no trades and also no trades. So that's two macros out of the way. The final macro that I monitor if both AM sessions are boring, low probability, and basically nothing happened, and we've seen a little consolidation after the two AM sessions. Therefore, we've seen a little consolidation after the AM session where price had already taken out many points of major buy side. We're due price to retrace back towards a discount. So to mark discount of this range, I don't expect price to take that in one move, but I am going to mark from previous low to previous high. That discount is going to be this area here, and then I can look to mark points to sell side just resting above, possible points of interest if we was to look for shorts from this area. Looking for shorts from this area is risky because of how bullish price action is as of now. Therefore, the reason on why I took the trade today with half position size. And let's drop down to the 1-minute time frame on ES as well so you guys can see this. ES won't actually play back and do the replay. However, you guys can clearly see the trade that was taken just around 20 to 30 minutes ago of this short that I took. Very correlated between NQ and ES. Okay, so let me fast forward price and you guys will see that we had a clean market structure shift as of now. So we had a clean valid shift in market structure and a bearish breaker after taking out the previous short-term high on NQ. I was looking for an entry short off this bearish fair value gap. All we need, guys, to make money is a 1 to 2. So I was looking for an entry short of this 1 minute bearish gap, a stop placement at this previous body's candle high. So the candle that created this fair value gap, my stop placement is there. It's above the I fair value gap, it's above this bearish gap, and above this one. That's the three confluences plus the breaker on why price will go in my favor. Therefore, my stop placement is above. The stop placement today was very, very giving, only risking 13.25 handles, and I'm looking for a 1 to 2. So whatever low creates a 1 to 2, which was actually this previous low, I'm looking to target. And yes, guys, it's only 30 handles, but across multiple accounts, that's still a significant gain, which I'll be happy taking any day of the week. So 1 to 2, and that's the best that we could have got out of price. So if we look at this low, and you can see that we have a breaker paired with this 1 minute bearish gap after taking previous high, clean displacement, also inside of macro. So macro started at 11:45 and then ends at 12:15. So let's see whether we get an entry off this 1 minute bearish gap. Today I actually caught a little bit more of a later entry off this gap with a little bit of slippage just outside of the gap, but I'm not too bothered about that, to be honest. So let's see whether we catch an entry for price, and there you have it. So that was my entry as of now. I caught an entry off a tap on this 1 minute bearish gap. Stop placement, of course, at this area of only 13.25 handles, and let's fast forward price to see how this trade played out. Right, so now we've taken the previous short-term low, which is this area here. This is a point when I went straight to break even. So when this candle took previous short-term low and the trade starts to go in your favor, you immediately go straight to break even. Therefore, it's a risk-free trade. So I took this trade with half size, and on the 5-minute time frame, we're not in a 5-minute bullish gap. However, on the 15-minute, the previous 15-minute candle traded back into a 15-minute bullish imbalance. Therefore, that was the one confluence and the only confluence going against this trade. Therefore, because there's only one reason going against us with this trade, I decided to take it with half size, minimize my risk, and of course, yes, it ended up playing out. So now we expect every bearish confluence, every bearish gap, mitigation, order block to be respected until we meet the final objective. And there you have it. And that's where I closed out of the trade fully. And I took it with 6 contracts, also across multiple other accounts. And that was it. That's all we secured out of today for 30 handle profit. On Monday itself, yesterday, it was indeed a very boring day to trade. I didn't take any positions. It was very much sideways, boring price action. I managed to sift through the boring price action and obviously take no trades. Friday, as of last week, I was on a flight, so I didn't manage to take any positions. Thursday, as of last week, I didn't take any positions either. There was no opportunities aligning with my model. And then as of Wednesday, it was FOMC, called the day off. Tuesday, as of last week, inside of the lunch macro, I took a position, ended up being break even, plus 5 handles, but that's relatively break even. And then Monday, I took no trades. So as you guys can see, last week for me was a very slow, boring week. That does happen. But you have to be patient in order to wait for your model. And now look, I've been rewarded 30 points up, so up over 20 to 30k on the day. And that's the art of having patience in your model. Guys, if you enjoy these recaps, make sure to drop a like on this video, run it up to 1,000+ likes. Drop a comment as well, what you guys want to see inside the next video, because I do look at the comments and I try my best to reply to as many as possible. So drop a comment on what you want to see broken down inside of the next video, and I'll speak to you guys tomorrow for the AM session. Have a great rest of your day.